Hey folks, doing a sound check. Feels like 2020 again, doesn't it? 100-day handles on S&P. Just staying committed to what I told you folks. If there's a big day, I'll come up. Just kind of coming up for the last hour here to talk about a few things. That's a good question, Runner. I don't know who the artist is. I get it off some site that gives me the ability to play music with no fees. I'll see if I can find it. We'll get through it. Yeah, I just want to apologize for folks. There's something with the database on the market grid that got posted. Trying to figure out what happened yesterday. The dates updated, except for the numbers were the same as the previous day. I've been working on it this morning. Got somebody else looking at it, so I apologize for that. The S&P numbers and those things were on the channel last night. Okay, let me switch over here. We got quite a few people already joining us, so we'll go ahead and start talking about what's going on. Crazy markets, right? I've got I'll bring this up full screen. There's a couple things that are going on from the standpoint of the interest rates, yield curve still flattening. I mean, some of the things I've been talking about the last several days, they're not getting better, they're actually getting worse in some ways in spite of this rally. And I'll just address this a little bit, because I believe the markets and the participation, the number of players in the markets have just expanded over the last couple of years. And what we're seeing, in my mind, I had this picture of a old western town when they drive the cattle down right through the town, like 1,000 cattle run right through the town and destroy it as they go through. I guess that's what they call the bull market, right? That's what this was today. Literally just, overnight, it just kept getting more and more traction. I think I woke up at 4 in the morning, made the mistake of looking at the markets, managed to get back to sleep. It was getting pretty insane, up 50 handles in. We're up 93.50 right now. We took out last week's high, so that whole weekly reversal that I've been talking about, that trade's over. 46.72 was last week's high, so we're trading above that right now. So what is this thing? And I'm going to show you a couple things here, and I want to go more specifically. Again, I'm going to focus in on the yield curve and what's going on in treasuries again. I still think there's something really wacko going on in the treasuries, and I don't know that anyone's picking up on it. Maybe there's a few of us, but this very likely is not going to end well. We're one day like this, not even. Yeah, one day, another day like this, and we'd be at an all-time new high again in 3 sessions, right? We traded 45.01, actually traded 44.92 last Friday. Here we are at 46.82. So it's 200 points, just short of that. So crazy rally. I think the phenomena that we're seeing is just the analogy I just put out there is the stampede. And I'm telling you that the retail, those of you, the retail folks out in the marketplace are really dominating and very, very aggressive. They don't follow the normal Wall Street standards. You see everybody, old guys like me, usually aren't even close to being right. And the only thing that saves my ass is that our database and some sanity around a very strong process that I've used for a long time. So let's take a couple things here. Take a look here. This is the hourly chart on our models. I still have to figure out, we can't get these things, we haven't been successfully able to get this stuff into TradingView. because there's some modules and outside modules that we call to out of TradeStation to get some of the calculations, because it's kind of over the capacity of what TradeStation could do. So we put some modules together. But right here we've got a buy at 45.86. When was that? If I can get it an exact time here. See if I can get a time on this. 10 p.m. last night, maybe? Yeah, 10 p.m. last night. Get a buy at 45.86. We're still in that buy. There's something I want to point out here. If you look at this pattern up at the top, I always talk about the RTX sell. We got an RTX sell on the hourly, and we've just been drifting sideways here. Now we're coming into the 10-period moving average, and if you're looking at the PPMs, you have to move the decimal over, so it's 0.64. A very strong underlying trend here, and that support number is coming in at 74. So we're trading down. This is some of the lower numbers that we've seen for a while from the standpoint of what's going on in the with the futures over the last couple hours. So we've been drifting down toward this 10, and the 10 is breaking its first, second derivatives. It's trying to roll over here a little bit. There's also a key pivot number that's down below this market to watch, 46.67. So that would be a number. If we took that out coming in to close, we could see a pretty good liquidation here. And yeah, the volatility, I've been talking about the volatility monster. It's here. And I told you in last night's video that I expect to see all of this stuff continue to be quite strong as far as the volatility. This isn't going to make it go away another day like this. So we've got 5 more days of probably 60 to 80, maybe 100 handles wide on the S&P. So, handles a whole number from 4680 to 8182. Those are handles. So we're looking at a potential at least 60 to 100 of these every day. And it looked like to me last night that if we would have stayed under R1, which we did not, if we would have seen a little bit of weaker numbers, but there was never any weakness at all. I think when I was doing the broadcast last night, we were up at about 7 or 8 handles. The high was up about 12. And like I said, it just kept building. When we came into London's opening, it got even stronger at London's opening. I stayed up for a while to watch this action. So as far as, let me flip over to a daily chart, and we'll zoom in on that. Just a couple little perspective here at the end of the day. The RTX on the E-minis right now is 46.56. So we're right now last 45.90. So 77 last. Trying to get these numbers. Here we go. 40.77. So we're just RTX. I'll get it right. 46.84.50. The high was 90. High was 92. So we went just above RTX. So this is, believe it or not, within the expectation of the market grid, and this is the kind of volatility we're getting. So we're not even breaking out. Now, something is happening. Look at the PPMs over here. PPM 1, 2, and 3. They started to turn up last night. Well, this market action has put us not positive, by the way. So all we've done is hit the second derivative, and the same with these. The PPM 3 has turned up pretty big, and that's a 40-day moving average I've been talking about. 45.96 is there. If we go over to I'm going to go to SPX for a second. Is right here if we go back to last Friday, we traded right on 44.97. We traded 95 low. We held that 21 period moving average. The PPMs are all turned up. We're 0.71. I talked about this last week, that the intermediate trends are still in place. the secular trends are still in place, that there's no way we're going to get some big collapse out of here. Did not expect, all honesty here, did not see us bouncing back this strongly in a couple of days. That was not part of it. But with the volatility, if we just go back one step here, with the market grid, this was, like I said, in line. This is the cash now, 86.83, and the high was, I'll get it right, 46.83, and 46.94 was the high, so we're above it. Right now we're at 80, so we're trading just below RTX. So it will be interesting if we get an RTX sell signal, which would be a close today over 46.83. And it looks like it's trying to drift a little lower. Like I said, I'm going to flop back to the futures here for a second. Let me get over here. You can see here, we'll go to level 2 here. And what we're seeing is that pretty decent little downtrend starting to form here. 78, the number I just told you, 67 is that number to watch. So it's another 10 handles. But we're definitely starting to back off, which I don't know if we call it encouraging, it's just what's happening. I mean, this is back towards 72 roughly was the high on Friday. So let me spin over to something else. And somebody mentioned this on Twitter, and I thought I do need to cover this. There's some numbers I've been telling you to watch, and this IRX here, this right here is the daily, but this is very interesting, and this is a trigger point for me. This is the 13-week T-bill. It's trading at 0.58. So let's just unpack this for a minute and try to put some logic inside of what's going on here. So we're seeing yield curve flatten. It continued to flatten. I'll show you that here in a second. And we're seeing the short end of the market. Everybody's bidding up. So is that just confirmation the Fed's going to do the taper? They're going to do everything faster. And then somehow the taper this time is bullish. So think about the last time in 2018, fourth quarter 2018, the taper was very negative, right? It had the taper tantrum. Now, I showed you folks on the spreads. Let's go over there real quick. On these spreads, this was, if we go back, let me get this out of the way. If we go back, this over here, if you see where my cursor is, this was the taper tantrum, this decline right here, okay? Then once we got through there, we got into a steepening yield curve, and then this is the bottom on 2020, March, the famous March 19th, which was a Sunday, where the Fed said we're going to buy everything. Yield curve steepens. Now we've been in a steady decline as we came into August of this year. I was talking about this flattener, and it just accelerated and collapsed. So right now we're at 0.53. Just a couple of days ago, we were at 0.62, 64. Then we went to 5.8. Then we were 5.5. Now we're 0.59. And I continue to believe that this is ultimately going to be really negative. We saw yesterday that the financials were able to do really well, which is all based on a little uptick on the 10-year. But I'm not sure who's paying attention to this. Maybe just me, huh? Maybe I'm the only one, and maybe that's a good thing. But this continues to bring great concerns to me from the standpoint of what's going on in the banking system and just in the background. It's a old buddy of mine on the trading floor when the arbitrators would come in and distort the market. He'd always say, do not pay attention to the man behind the curtain, from a reference to, what was it, not Wizard of Oz, But the whole thing is, the Oz was back there doing the handles, and nothing was real. And that's what's happening right now. The Fed is out of control. They don't have control, and we're seeing just these massive stampedes the last 2 days. I would ask you folks, maybe on the timeline, what your feelings are on this. Is if you bought the prices right now, 46.82, what do you think it will look like 3 days, 5 days from now? You're going to be higher, you're going to be lower. And that's the real question to ask. And I still see everything that I've been saying on the channel, still see this massive sideways pattern. Even if we did go and print up to new highs, you could sell probably a rejection off a new high. Those are classics where they go all the way up and print up a new high and then just collapse after that. But I'm just not seeing the momentum. I'm not seeing from our database. We did get some traction last night. I think about 1,200 new buys. We're still at 27% bullish. So we're still in the hole. I talked a lot about this last night, that I still see a complete reset happening in the market. So it's going to be difficult, I think, to drive the market. I looked at all the meme stocks. Every one of them were up anywhere from 5 to 15, 20%, right? So Kathy's got to be feeling a little better. I think she was up 5% today. But all of this, you can see where the cash flow is going. You can see where everything's headed. And it just seems to me that there's some distortions going on that are happening. So I'm just looking at some of your comments. Yeah, Fraser lower, higher. Yeah, so I always like somebody says they're not going to let the market crash. So I'm assuming the Fed. But that's the old classic comment, right? Yeah, she's too busy. Yeah, she's too busy putting out more pieces of junk. Yeah. Um, yeah, I'm just looking at some comments here. Yeah, I have my concerns about this thing being able to follow through here. Where are we at now? SPX 78 here, still trading 76. We're up 1.87. Like I said, we get through 66. That could be a very interesting number. We'll cover this early in the live trading room tomorrow at 1 p.m. We'll do that. We'll definitely be covering this. But this spike here on this chart I've got here, which is the 13-week T-bills, these short rates spiking up to 0.58. I think I can go, let me put a daily chart on here. This is the highest level we've been, with the exception in August we printed to 65. So we've had some distortions here, but this is pretty big. We're also getting an RTX sell signal on a daily, so we'll probably come sideways a little bit, probably right back to 50. The Fed pushes this back to 50, 45, then we at least know they're trying to manage this situation. So that's what primarily what I'm going to be looking at from that viewpoint. Yeah, so, one of the things let's talk about that. Inflation, as I've been telling you, is I think the whole Omicron virus was a manipulation of the markets. I'm going to go full on conspiracy theory here, is that everybody knew this thing wasn't what it was being played out to be. But somehow the Algos played in, everybody played in, and I've talked about this for 2 weeks. I'm working on the third week now, is they broke all the markets. They broke crude oil. They broke the trends that were in the 10-year and the rising trends. And uh, let me just see if I can bring something up. I'll bring it up on the other screen. Make sure I can get it up right. But if we go to like, bear with me, I'll have this up in just a sec. I'm going to bring in TradingView here for a second, and let's put the Baltic Dry Index in here, and I actually want to get rid of that, and I want to go to the weekly. It's dropped substantially. It's starting to climb back in, but this is what I was talking about, this break. Look at this. These are weekly bars here. Let me go full screen so you can see it a little better. So if we look at this, we have 4 weeks down, getting some kind of bottoming pattern, but we're still below the moving averages. PPMs are still very negative, and so the Baltic Dry Index was broken. Let's come over here and let's go. We know what happened to crude oil. This is weekly. We get this move up. Now crude is down into its averages. So trends are being changed by the activity that came in out of this. Everything seems to be just contracting and going into a pause mode. So it won't be probably until mid to late January where we can look in the rear view mirror and actually see what's going on here. From the standpoint of inflation, but just looking at everything, it's like the trends have been broken. The 10-year, if I get that up here for a second, the 10-year 148 is right up against resistance again. On the 1.49 is resistance. We should come back in and probably consolidate, as I've been telling you, about 152, 154 max on the upside. Downside was, this is a daily chart, was a couple of days ago when we printed down to 1.34. That was it. We had some cycles coming in, a whole bunch of stuff happening right in this level. Yeah, so yeah, I love your handle, Jason Bourne. I'm just looking at a couple comments here. Yeah, so I'm not sure there's so much to talk about here. We're still seeing ES now trading down to 71. It bounced it back to 73 handle very quickly, but we got to watch that 67. We've only got about 20 minutes to go, so I'll go ahead and hang out to the close. Just kind of interact with you folks as far as that goes. You're looking at the other thing that did happen. I talked about Bitcoin. Bitcoin did print up to the number I was looking at. I was looking at around the 50, 51, 52 handle. So we got there. We're backing off of that. I still see Bitcoin probably holding over its 200-day, but I think there's a lot of work to do. The PPMs are all negative right now, so there's multiple days of work, and there's still some vulnerability there. Let's go over real quick. I want to go back over. I want to go to E-minis and I want to go to the dailies. I'm sorry, to the weekly. Yeah, demand line 4584. That is going to be your primary demand. The PPM 1 is back at 0.72, so that's going to be a big number there to watch. So I want to go over and watch the screen here. We keep drifting lower, and we're at 74. 67 is the number we're watching. Not sure we'll get there. The algos are running everything again. The machines are running things. These are, you can get on the side with them. If you were on the side earlier, it worked. But when we go over here and just put an hourly chart on, you can see we've drifted. We're actually trying to take out the 10-period moving average right now. And that's 46.73. Let me get that pivot. Yeah, 67.20 is the downward pivot. So about 10 handles lower than where we are right now. Yeah, this is encouraging. I'm bringing up gold, and gold's been hanging in there pretty good. It's the hourly chart on gold, and we did get a little buy signal on gold at 1787. It's up a whole dollar from that point, but this is one of those volatility bubbles. These numbers still got to get over 1800, another $14, and we'll be good shape there. Silver's much stronger. Just touch on silver. Got one of these little flags. We should head toward about the 200 hour. This is still hourly chart. So 2280, 82, around that level. Looks like could be a good pop right to that level. Yeah, so you can kind of see this what's going on with the yield curve here. IRX up 34.88%. The 5-year up 3.6, the 10-year up 3.21, the 30-year up 2.2. So you can see that bottom end just rocketing, and this is not a good sign. Still squeezing margins on banks. There's a lot of other things going on. And one of the things I talked about, whether it comes into play or not, is this Evergrande and the Chinese market. I think part of this rally may also be related to that the Chinese came in and lowered the triple R rate yesterday, their time, and that was construed to be supportive, and they were making moves to do further controls in the real estate area. So, most likely Evergrande's already defaulted on some of their international payments, and it looks like they're going to be kaput. Maybe, I think it's tomorrow on Wednesday or Thursday. I'm not sure exactly what day it is, but they definitely have some issues coming in there as far as that goes. So we're still trading right around 72, 73 on the futures, kind of holding in here. Back to 75, trying to get to 76. Let's watch this a little bit just to get a handle on what's going on. Yeah, I was trying to set up a little low here. Could print back into 78, maybe 80, 82, something like that. This is can be this setup can end up to be bullish, but it's at best neutral, at least for the next 3 or 4 minutes. Yeah, so really the only parameters from my viewpoint here to watch are the 67 on the downside, and then, you know, where it closes, maybe it closes over. It's trading right now at last week's highs. So this is certainly an impressive rally. But I just wonder, you know, I actually wondered this last night. I knew there was some upside potential, but not at this level. I wasn't seeing this at all. And like I said, this was just a complete stampede, and it just kept happening. It kept growing all through the night last night before the U.S. Open. So the stampede is big. We're trading down at some of the lower levels here, printing 71.50. Liquidity's been good today. I always talk about that. It seems when the market's getting bid, there's very good liquidity. When there's sell-offs, there's just virtually nothing there. So we're continuing to see that type of action up days. Good bids and offers on both sides of the market. Pretty thick for the most part, meaning there's a number of bids, hundreds of contracts on each side of each one. So that's typically pretty good. I'm just looking at some comments here, folks. Here we go. Yeah, I just see a couple comments like on Neo. All of those stocks are just, you know, really getting a great bid in there. Everybody that's been holding a lot of those stocks, PLTR, you name it, Global E, they're all got a pretty good bid in them today. So we traded to 71 and back to 74. We got about 11 minutes to go. Yeah, I don't think cash is dangerous right now. I'm not convinced of that. Yeah, maybe it's devaluating, but the U.S. dollar doesn't reflect that yet. Kind of keeping some of the purchasing power up, and some things anyway. Here we go. Now we're breaking down. Here's 70.25. So got a quick reversal here. 69 prints. So this is critical. Right here, 68. Here's 67, 75. $67, 50 prints, 50 bid, 75, 675. That was a nice breakdown point there. Let's see if we can find a support zone of some sort here after break 66. And there's another number right here at 46.60.50. So we'll watch that number. So there's another 7 handles below that. Below that, they could really get a heavy liquidation on a close. Is that going to happen? Probably not. But just like the other day, let's flash back to last Friday when we got that 39 handle rally in the last, I think it was about 12, 14 minutes. What happened then was the algos have been selling all day. They were looking for some sort of selling to come in to offset their buybacks, take profits. Well, there was no one there. They bid the market up. And now the opposite. They are hoping that they get at the end of the day here in 8 minutes that everybody's coming in buying ETFs and everybody wants to get their hand in here. And like I said, I'm in the camp that I think we're going to continue to be in a sideways pattern. The underlying trends in the intermediate are still very powerful, as is the secular trends I've talked about. Short-term trends are very mixed, although trying to turn around really quick. So the next couple of days will be interesting. Here we are trading 70.50 again. Offered 71, 72, 72.50, 73 prints. Right up to the upper end of the grid, 73 printed, back to 71, 75. So that was a little buying surge here. About 6.5 minutes to go. So here we are printing up 73.50 offered. So we traded a little bit under that 67, but that was definitely a pivot point. Now we're 75s, 76 offered, 76 and a quarter. Quarters trade, back to 550. Here we go again, try another run. 6 even prints, then 200 handles down to 450, 425, 4 evens. So with the activity, this is my opinion, what you're seeing here is you're seeing the algos trying to cover, there's some folks trying to maybe do some buying against their ETFs to square up the books. I've told you folks before, I used to work at a delta neutral hedge fund, about a $500 million fund, and we were every day trying to neutralize our net positions every day. So, and this was long before we had digital anything. This was way back in 1992, 91. So this is what we were doing all day long, is just trying to play delta neutral the best we could. So here we hit 75. So that's the kind of activity you get. Now it's much more sophisticated. You literally have algos to do this for you. So here's 78, 79, 950, 975, 82 prints. Interesting. We've got 4.5 minutes to go. 82 prints. So we traded from a low 67, 20 handles, 5 minutes. What was the high of that run? It was 84.75 printed. They're not done yet. So looks like here they come again, trying to bid this thing. R2 is 85.75, 87.50 for this 1 minute range. And S1 we printed 80.50, the low 80.50 exactly. Last 84.75 last minute. So we're now down to about 2.5 minutes, just under 3 minutes. So we're getting close. Yeah, we're just right now at 3 minutes, okay? So we traded 84.75 high, back at 82.50. Definitely some buyers coming in, so looks like maybe there's some folks squaring up. Here we are back at 84. 84 went offered. Back 83 offered even. $82.50 offered here. Kind of an 80-82 market. Here's 82.75, 83s trade. $83.50, 75, 84 offered, back to 75, 84 offered. Back to 82. Remember, the Algos should be on the sell side here, so they're getting bailed. They're getting some pretty good prices here. 84.75 offered. 85.50. This is a new high in this pattern. 575. Yeah, the PPMs are in WaveTech, but they're old style charts. Here we go. 86 offered. High print so far. 86 even. 84.75 offered. 85, 85.25, 50. This is the final minute, folks. You can there's the bell. So that was it. So we're going out very near the high of the day. 6 handles off. They're actually bidding them up after the cash closes here. So this is all the runoff. This is everybody squaring the books. And there's some pretty good buying here. Algo's had a really good day. Here we're 89. Looks like they can run this right into new highs here. No problem. Yeah, Chewy, I was talking about the getting back to the 200-day moving average on IWM and the Russell. So what did we print? High print on that run was 90.75. I mean, it looked like they wanted to print a new high on the day. They may still, who knows? So just talk a little bit about what we just saw here. Is really good demand on the close. A lot of good bids. We traded down to 67. Once again, let's take a look at this. Like 11, 12 minutes again, that last 12 minutes, we got a run from 66.75 up to 90.75. So 30 handle run again right on the close. And I would say right now the way I would look at what just happened is there was really good buying demand on the close, and that was most likely all the institutionals, mutual funds, ETF, folks that needed to balance out positions that they were getting orders for. And like I said, this is a very sophisticated now operation because everything can be done in algorithms. They know exactly what orders are coming in, and this is all very electronic, right? So it's not like the old days when we were trying to, on the fly, trying to figure out how many futures we needed to sell or buy on the close to get neutral. So this is a whole nother game now in the quant world that we live in. So pretty impressive. I will say that, that they held this together. I'm anxious to see what happens when I do my analysis, what our database goes. I've been, so Michael, what's an algo? The algorithmic trading, they're just HFTs, high frequency traders, and they're literally have technical quant stuff that is triggering these buys and sells and scalping and doing lots of very sophisticated type strategies. So when you get into days like today, and we did, actually volume was pretty good. We've seen higher volume on the downside. I think a week ago, Friday, not sure what days, they're all blending together. We did over 2 million contracts, 1.655 contracts. Pretty steady day though, and looking at it. Let's go over and take a look at this hourly chart, and we get that little spike down. See if I can blow up this chart here. There's a red dot. There's a red dot right below this market. It was 46, 60, 54. We hit a low of 66, 46, 66, 25. And we came right at that 10-pair moving average, just continued to dominate the action. And this is a hourly graph. So I suspect this will get a little higher. Tired is the word I was looking for. And right now, like I said, the WaveTech model bought at 45.85 is still holding that position on hourly. I wonder what happens if we go down to a 15-minute. Just see what happens there. Yeah, there was a buy on a 15 at 45.54. It sold at 46.47. It rebought at 46.76 and then sold it at 46.82. So this last little scalp here off it, just using my algorithms, is what that happened. Yeah, not only I guess it's JJW that people figure out that it was pretty harmless. It's actually almost non-existent. It's not even that. You've got an isolated country in Africa that has a really poor healthcare system as well, and yeah, it's interesting. So futures are trading back at 90.25. I said we're 92.50 high. They may just print these into new highs on the futures. I mean, there's crazy demand on this on the close. Yeah, just looking at some comments here. Yeah, listen, I promise you guys this stuff's going on. I'll show up. And yeah, just a crazy day, just on reflecting on what's going on. And like I said, I think a lot of this has to do with just the trying to put a qualifier on this. It's just the stampede mentality that everybody just keeps buying it. I saw a really funny tweet. I think it was a TikTok video, and some guy talking about if we all act as a team and it's a coin trade, if everybody buys and every time it goes down we buy more and we work as a team, we'll get it to $1. And it's just, I mean, that's kind of the mentality out there is like, hey, we're on a team. And I think the new retail investors have definitely made a mark on this, on the markets in the last couple years. And I think going back to, it all started, and I've talked about this before, but it all started back with Robinhood, but more importantly, when the mainstream BDs came in, when Charles Schwab took away the ticket charges and then announced they were going to do fractional shares, that's when everything opened up. And now it goes to my favorite line is investing used to be for someone, now it's for everyone. So, and that's literally what we saw today. Everyone that could be buying was buying. And if you're an arbitrager, here's 92. We're trading at the highs right now. 92.75 high, just traded 75s. Let's go back over this chart and just see what this looks like for a second. Yeah, 275 traded. That was the high. I don't think that was a new print. I believe that was the high. And yeah, they're just continuing to bid these up for 8 minutes after close. Here we're right there again, 50 offered. So yeah, this is pretty impressive. Yeah, our platform does provide a track record, and the beauty of every symbol in our database, 16,500 of them, actually gives you every trade it's ever generated. It's got a self-rating system to figure out how well the model trades on the individual stock or instrument you're looking at. And it's got all kinds of statistics, expected holding periods, expected gains, all kinds of stuff, and tracks it every day. It's an end of day. So yeah, it has all that. Yeah. So yeah, I'm just looking at some of the comments here. Yeah, like I said, the fact that I don't want to say much here. It's just YouTube's a problem, but I do think there's a lot of things going on in this world that don't make sense. We'll leave it at that. Join us in on the live trading room. It's private, secure, and it is a subscription service, but we're putting a bundle together for the first 100. Probably, there's going to be some things. We're going to release all the indexes. Unfortunately, right now, one of our guys is down with COVID, and so that's really we're a small team, and that's really taking a couple of things, taking me out of the game. I was talking to him just a little bit ago, telling him, man, I really need you back, and he wants to be back. It just feels like crap yet. So anyway, folks, I'll see you tonight at 8 o'clock, I guess, 8:15. I'm actually considering something, and I'll probably put something out on Twitter. I may actually go back and do this back at 9 o'clock, start right at 9, because what's happening, it's really cramping my style not having the output of the database. Last night we couldn't even get it. I had to put it out on Twitter because when we have these big days like this, for whatever reason, I think there's a lot of errors in prints that have to be corrected by our database vendor, our data vendor, and sometimes they deliver the data to us a little later. Used to be we'd get this stuff, at you know um, 7 o'clock Eastern time. Last night we didn't get it till 8. So what I'm thinking about doing is changing the broadcast time from 8 to 9. And instead of waiting to eat dinner afterwards, I think I'll go home and have early dinner, and then I will come back and do the stream, and then come back. That actually could work a lot better. So I'll let everyone know what I do with that. I'm just trying. I knew there might be some adjustments once this time change come. I'm in Arizona, so we don't change our clocks. So half the year we live in Mountain Time, which we belong in. The other half we live in Pacific, and it changes. Our servers run constant. It does go with the time changes, so it jacks up everything. So anyway. Yeah, so Harry Toe, you're talking about OTC like penny stocks. Is that right? Yeah, I'm liking that 9 o'clock. Yeah, so if you want to check out the trading room, um, let's see here. I can still talk to you. I'm going to put the opening screen up here. Let me do that. You'll get some music as well. This is where to go to find out more. www.kindlereport.com. And I believe you folks can still hear me, right? Okay. Yeah, I believe just on Fit Coach Marshall comment that you made is I think there's 200 variables. So they got a bunch of this stuff. They can just keep this thing going on forever. I saw the Pfizer CEO actually talking and saying that, you know, but the Omicron can cause other variants. They just got to keep it going because this is a machine now. It's a money machine, and they got governments paying them. They don't even have to rely on you and I, our insurance companies, or any of that stuff. So, I mean, what a deal. What a business model. Um, yeah. Yeah, let me see just some other comments here. I moved them so I can actually talk. I just got it. So that's how to get into the trading room. Um, Pretty much everything goes off of that. Like if you go kindlecreport.com /trade, you can go /wavetech, and you go /expert, XPERT, no E in the X, and you can find out a little bit about all of our products. You can even go to, we got all kinds of stuff, right? Portfolioexpert.com. You can see a bunch of offerings there. And then you can also go to, make it more confusing, kindlereport.net for the trading room. So, yeah, I'm just looking at a couple of comments here, and we'll get off here in just a second. I agree, Rob. I actually think that this whole announcement of this new variant was to crack the markets, which they did. They changed all the trends. We're still not out of this. The fact that we rallied back on the stock market, that's one thing. But we look at crude oil, we look at all of the other trends. You went watch crude go from 66, I'm sorry, from 84 to 66, now back to 72. But we're a long ways to getting back and printing in the 80s on crude. And there's a lot of things that got broken. And that has reset the markets for a while. Buy some time on inflation. So we may see inflation may be moderating. And this is something I talked about. If you want to watch that last Friday's video that I did, I went through a lot of details on some of the things the Fed's going to be considering. The flattening yield curve is a problem. There's a lot of issues out there, and we're back on the wall of worry. And we'll see if we overplayed this thing in 2 days. We come into tomorrow. There's really no news this week. I talked about that last night's video. There's no news coming out at all. So CPI on Friday. Yeah, I appreciate it, Fit Coach. Yeah, exactly. Payo Matteo. That's exactly what happened. They switched the cash flow purposely, and that all they had to do is trigger the markets, and here we are. And you got idiots like Tony Fauci and all these people in the government. I've said this before. I'll just go is if you look at who's running governments across the planet, especially in the U.S. You've got a senile old woman in the House. You've got a senile old man president. Then you've got all the minions all around them and all the things going on. And you get what we got. And so, yeah. And even on the Fed side, I got to throw Janet Yellen in there. There's just a lot of incompetence anywhere you go. And the only credit I give to Janet Yellen, she's the only Fed chairman that never had a disaster in her tenure. Only one. You can go all the way back, going back, I've been watching every Fed since Paul Volcker, and I studied what Arthur Miller and some other folks back in the day did. And Arthur Miller was also Treasury Secretary. He was probably the worst Treasury Secretary potentially ever to live. And Rubin did a wonderful job under Clinton. He was brilliant what he did. He restructured the entire debt system, and that was pretty phenomenal. I was a huge Rubin fan just because of what he did, and there's been a lot of Goldman guys run through that place. Paulson, I don't know about that, but anyway, there's just if we look at what's going on in the government right now, it's just scary. I'm with Elon on this. Nobody under 70 should be elected to any major federal office. I think that's a thing. I would like to see, when I was a kid, when Kennedy was brought in, he was the youngest president we'd ever had at the time. You got to get some young blood and some folks in there that, care about the country and younger people, maybe 55, 65, but not 80, 81. I think Fauci turns 81. Need these old people to just go retire, I've still got a few years left in me. But, when you start to get up there, you really start to feel age. I told a friend of mine that about 10 years ago, I'll be 70 next year, and I told him that I could feel when I turned 60 the aging process starting to happen. I won't get too philosophical, but I would just tell you, as you get older, whoever they is, you just get more and more things taken away from you. Ultimately, mobility and other things, if you're fortunate enough to stay alive. If you don't do the right things, you lose everything. So it's really go. Anyway. Yeah, you're right, Rob. And that's one of the things, like all of a sudden J. Powell gets reelected and now, inflation is not transitory. Well, if you know that inflation is actually good for you. But I'm telling you, they broke the back of inflation temporarily. Whether it lasts or not, we'll see. And that's going to continue to be a dialogue. So I am still, I love hanging out, talking to you folks. I'm going too long. I got to get on to some other projects. So see you tonight. I think I am going to do 9 p.m. Eastern. That's going to be a much better starting time for me. I get an early dinner and then go back. Yeah, Rob, you're right. And they killed Kennedy. They probably would have loved to take out Trump too, right? So, yeah, you're absolutely right about that. Thanks, Benjamin. That's funny. Yeah, folks. Anyway, have a great day. You want to get into find out more about the trading room? There's a bunch of perks. I think we got about 30 seats left for the first 100. So come and join us. There's gonna be a lot of perks and a lot of stuff. We're doing a lot of education there. It's not just all trading, education, trade setups, a lot of stuff, and then sometimes we will do trades, real time trades, all that kind of stuff. So it's just kind of a mishmash. We started it. Next week will be our first month that we've done it. So it's kind of still a work in progress, and we're starting to get to the point where we're starting to get things figured out and structured and all that kind of stuff. And so basically it's 9 hours a week. Monday, 1 to 4 Eastern time, Wednesday, 1 to 4 Eastern time. And everything's easier if you have some of our products together. Listen, this whole effort here is to try to help you folks. So anyway, have a great day. We'll see you. Let's do 9 o'clock. I'll put that out on Twitter too. So let's do 9 p.m. Eastern time tonight instead of 8:15 or 8:20. I need that extra time to get the database done. Have a great rest of your day, folks. Thanks. Yeah, go ahead and subscribe. Hit that like button, everyone.